But let's understand a little bit more about why we're ending the week in the red, not on a week-to-days basis, but just today's trading session. We have Narendra Solanki, Head Fundamental Research Investment Services at Anand Rathi Shares and Stock Brokers, joining us. Narendra, hi, good afternoon, and thanks so much for your time. And that's exactly the question, right? What has got the sentiment so marred on the street that after 4 positive days, we're seeing such a nosedive coming in on the Nifty? Is it only profit booking, or is there more at play over here?
Yeah, good afternoon. Yeah, see, after a decent 600 odd rally or recovery, I think today we are seeing largely profit booking ahead of the key Jackson Hole speech, which the Fed is going to make, and we have a 2 days holiday and also a shortened next week, wherein on 27 the tariffs deadline is also coming to an end, which is a holiday again for our Indian market. So I think these two key events the markets are factoring in, and that might be just on a cautious note. Traders are booking some profit after around 650 points rally.
All right, so that's a bit of a profit booking that what we are seeing on the benchmark indices, at least for today. But Narendra, also talk to us about the sectors that you believe can be gearing up for the next leg of the rally. Because if we talk about this particular week, the auto counters have done very well for themselves, and so was the consumption basket overall. What is your own sense? Where are you putting your bets?
Yeah, definitely. With the reorganization of the GST slab rates and simplification of the GST structures, I think the auto sector has got back its momentum. And of course, the FMCG segment, both consumption as well as durables, discretionary and non-discretionary, have not performed really well throughout the year. And I think since in the second half, with the festive season coming on, inflation going down, rates are also at their lower levels, and the rural market is expected to do well because of good monsoons. I think second half is going to be better for both these key sectors of our economy. So we are betting on auto inquiries, then consumption, both discretionary and non-discretionary, and as well as non-banking financial companies which are more consumer oriented, like Bajaj Finance, Chola, kind of segments. We are looking positive for next quarter or so.
Okay, so that's the take on some of the sectors. And in fact, Narendra, let's just address the flashes on the bottom of the screen. 23 chip design projects have been approved under the design linked incentive scheme. The government is pushing for semiconductor design innovations with this said scheme. Narendra, you believe EMS could now be a good space to look at, given that in his Independence Day speech too, PM Modi had flagged off the need for domestic production of semiconductor chips. What's your take on this entire space?
Yeah, definitely. EMS has been one of our key themes where we are positive on for the long term. However, you have to keep in mind that these are very long gestation projects, and these kind of projects doesn't deliver in a year or a two. So you have to have some kind of a patience to hold these stocks for 3 or 5 year timeline period. And within these timelines, you might be also witnessing different valuation cycles because of different ordering activity or different momentums or different sentiments. So you have to keep holding those stocks, and then only you can achieve a good return on that. But yeah, from a theme perspective, we are currently positive on EMS theme, and we recommend whenever any hiccups or major reactions come, then it's a good opportunity to add for the long term.
That's about Dixon Tech. But moving on, let's put the spotlight on the auto major Maruti Suzuki, and let's tell you what's exciting that we are picking up on Maruti Suzuki right now, because what we feel is that exciting times ahead for Maruti Suzuki in terms of their SUV offerings going ahead, and a couple of major events that are lined up for Maruti Suzuki. First up will be 26th of August, where we will be having an event by Maruti Suzuki where the company will roll out their first BEV, e-Vitara, from their Gujarat plant, and along with that, the company has plans to make the exports of this particular car to 100 countries. So that is one of the events that we will be watching out for. Of course, with the first ever launch from that particular plant, and that's going to be an electric vehicle, the gates are already open for the upcoming launches in the times ahead. But next up, in the month of September, 3rd of September is also going to be an interesting day, as the company has said that they're going to be launching a new mid-size SUV is what we are picking up right now. What they have said to us is that some of this exciting launch or something exciting is really there on 3rd of September, but we understand that it could be a new mid-size SUV. And for the first time ever, you may have a 4x4 option for Maruti Suzuki and a tech upgradation to ADAS level 2 as well is what Maruti Suzuki can come up with. The new car can have 3 engine offerings, be it petrol, hybrid and CNG, and all of this to be kept in mind, as Maruti Suzuki has already made their plan clear that they want to be really, they really want to make it up for the SUV market share and the kind of loss that they have already seen in their overall market share. For now, the overall market share is close to 40%. We have been hearing out about their aspiration to take it higher to 50% as well. And in terms of their offerings in the mid-size SUVs, yes, on your screen you see that Maruti Suzuki is lagging behind a bit versus their competitors. So seems like exciting times for Maruti Suzuki in the times ahead. Major events lined up. We'll definitely watch out for that. But Narendra, what's your sense on Maruti Suzuki? Yes, of course, we have seen a very good run-up because of that GST size cars. They are expected to get the bigger boost. But with this new launches and the kind of things that the Maruti Suzuki plans to do for their rest of the portfolio, how do you see that stock?
Yeah, definitely, it's a positive for the company. However, the mid SUV segment is a very contested and very highly competitive segment to be in. But with the presence, with the distribution level of the Maruti and the after-sales service of the company, I think it could make some dent and gain market share in that segment. So it's positive for the company in medium to long term. And also to look out for is the exports. So exports should also drive some part of the revenue growth. That is what we expect with the stock.
Okay, so that's the take on Maruti Suzuki. Let's shift focus, and Narendra, let's talk about the entire realty space. There's IT, both of these are lagging, but in fact the big laggard today has been metals and FMCG. Out of that also, I want to get your sense on FMCG and consumption now. So many levers for a consumption boost. Could be the Independence Day speech, the GST rate rationalization, the budget boost coming in, RBI boost. So many levers at play over here. Where do you think consumption could head from here? Because that cheer is something we saw for a couple of days on Nifty FMCG, but no meaningful recovery or turnaround here. What's your take on this?
Yeah, definitely post announcement, we have some kind of a relief rally. But what market might be factoring in is the near-term impact of delayed sales or delayed demand because of that announcement taking effect, would be taking effect in maybe in October or somewhere in mid-October. So that kind of would shift the demand at least 1.5 months ahead. So that impact might be market may be factoring. Hence, we have not seen any follow-up rally. But I think if you remove that aspect and see the longer term, 1 year down the line, 2 year down the line, so that's that then there is no doubt about the improvement in the overall consumption and demand scenario for both FMCG as well as durables segment. So I think the overall in second half, the performance should be better than the first half overall for the sector.
All right, so that's the take coming in on the FMCG basket. But Narendra, the other pocket that is showing decent moves rather today is actually the pharma pack. Because we were also highlighting and flagging off the fact that 15% tariff on pharma that is being applicable on EU and US deal versus what was threatened to be with that 200 to 250% bracket with respect to pharma tariffs. But yes, the overhang still remains. But what is your own sense on pharma pack after so much of correction? Which are the pockets that you are liking?
See, in pharma, our broad view is that the drug manufacturer or drug exporters There's not much downside from here on. We only see recovery, but that recovery is very difficult to time because of the tariffs situation is not very much clear as far as Indian pharmaceutical exporters are concerned. However, another pack which are hospitals. So we are very positive on the hospitals segment in the healthcare sector, and we see a lot of capex coming online in this year as well as in next year, and a lot of operating efficiencies improving for those hospitals wherein the new capex has done and the utilization rates improve. So in comparison with drug makers, we like hospitals much in the healthcare segments.